Straight away, we will go into keynote presentation, and I'm delighted this morning to have with us a distinguished scholar, a practitioner, someone who has seen both sides of the divide. He's worked as a banker, as analyst, as economist. He's gone to the government to advise them, and then personally, I have his work at NBS has enriched my work, because as economists, as analysts, you need data in a very timely manner. I'm just going to go through him. He's someone we know. Dr. Yemi Kale is a partner, chief economist, as well as the head of research at KPMG, Nigeria. He has multidisciplinary expertise in data collection and analysis, asset management, project management, and planning, macroeconomic analysis, financial, economic, and investment research, fiscal and macroeconomic policy advisory, and investment banking. Dr. Kale has received several domestic and international awards for performance and excellence, and hold a BSc in economics, first-class honors. You know what that means. Master's degree with distinction, and a PhD in economics from the London School of Economics and Political Science. He is also an alumnus of the Harvard Kennedy School of Government. He has held the position of special advisor to the Minister of Finance, and subsequently technical advisor to the Minister of National Planning, from where he was headhunted or seconded to become the Statistical General of the Federation and Chief Economic Officer of the National Bureau of Statistics, NBS, in 2011. And he became the first Chief Executive Officer to be reappointed at the NBS for the second time, when his tenure was renewed by the former President Buhari, in 2016. In this role, Dr. Kale was widely commended, including myself, for repositioning the NBS as a more strategic and credible organization. At the National Bureau of Statistics, he was applauded by both Nigerian and foreign observers for his reforms in data process, which many believed had restored sanity to the data production process in Nigeria. During his time at the National Bureau of Statistics, significant data upgrade, including GDP rebasing, labor market, and consumer price index, agriculture and business census projects, the state's GDP computation, among others, were initiated and completed. He has led and spearheaded the development of various models and the indices which are currently being used today by policymakers in Nigeria and the international community, including the Nigerian macroeconomic model developed for the last two national development plans and annual federal budget, the Human Development Index for Nigeria, the Multidimensional Poverty Index for Nigeria, Labor Productivity Index, Public Sector Perception Index, Business Viability and Sustainability Index, Foreign Trade Index, among others. He is also the chairman and the Nigerian Country of Office of Accountability Lab, and a non-executive director on the boards of several other institutions. He has written widely on fiscal and monetary policy, governance, finance, and economic development in Africa. And I'd like you this morning to please join me as I welcome Dr. Yemi Kale to deliver the keynote presentation.
Good morning, distinguished ladies and gentlemen. Start by saying that, and this a direct reaction to the previous speaker when he said that the prospects of Nigeria are positive. I'm not disagreeing with that. I just prefer to break it down into the time period. First of all, I have to warn everybody, I tend to be very, very frank. So so in case I surprise you with the level of frankness, and very, very controversial. I'll try as much. Since I came back, it's actually supposed to be the other way around. In private sector, I should be freer, but I was very controversial even in government. So I think it means that I will even be worse in the private sector. But the point I'm trying to make here is that I think it's important to break it into timelines. So yes, the prospects, I agree, are positive in the longer term. But in the immediate short to medium term, there are going to be huge challenges that the economy has to face, and the prospects are not particularly great in the shorter to medium term. And to be honest, it's those that navigate those challenges in the short, medium term that will be around in the longer term to benefit from the good, positive reforms that are going on in the economy. So I guess the objective is to stay afloat, stay alive, navigate those challenges, and in the longer term, when the economy improves, if you're able to survive that to that extent, then it's going to benefit you. If you're able to survive, and I think that's the theme of my presentation. Now I'm going to say a lot of things, some that you already know, some hopefully that I don't know, others that you know, but I'll try and give you hopefully give you a different perspective, and some might even be a repetition of what has already been said, because clearly most of these issues are well known by business. I can't tell a business operator how the policies and the economy is affecting their business better than they can. And also to say that challenging macroeconomic conditions, different policies of government, whatever you want to call them, benefit some sectors, some businesses, and destroy others. So you will never see any policy that is universally accepted by everybody, whether even within the same sector, depending on your standing. So it's very difficult to say this is how the sector is going to be affected, because you'll find some businesses within the same sector doing very well and others not doing very well. You'll see businesses across sectors doing well. Again, so policies, depending on how a business is structured, what their commodities, their goods are, what their services are, it's going to affect them differently. So again, I understand that this is a room filled with different types of businesses. So so whatever I would say some of you agree with, because that's what your reality. Others will disagree because they're not feeling it. So I would put that in context, so that in the question and answer session, I'm not taking apart. That's not what I can show you my financial. This is not correct. It might be correct. I'm going to give a general overview. Now, my presentation will be in 3 parts. Where has it been controlled? Yes, please go ahead. Next slide, please. As shown on the screen, obviously I'll start with the global economic environment, because a lot of the challenges we're going to face in Nigeria will be affected by what's going on in the global. It is being affected by what's going on in the global economic environment. I'll just give an example. For example, if as soon as inflation started rising in more advanced economies across the world, they started to increase their interest rates, and we know exactly what happened here. The same thing with the Russia-Ukraine war. Supply chains disrupted, all your import. Now, the problems many of you are having, many of your businesses that are import-dependent were having, was not necessarily just FX supply. It was also, can you actually even use the FX to buy the goods that you wanted? Because that entire Russia-Ukraine area was completely disrupted. And that meant the overall supply of the goods that so even if you were close to the former central bank regime and could get the dollars that you needed, you might still not have been able to get the materials that you needed. So there were two sides, but everybody seemed to focus on just give us the dollars, just give us the dollars. And to be honest, and this is controversial, I have no evidence to back it, I just felt that why would I go, my shareholders want maximum returns. Why would I bother getting dollars from the CBN and go and start searching for inputs all over the place? So the margin between the the what's the word that we like to use? The margin between the CBN rate and the official rate was so wide that I don't think anybody's margins, any business margins could And I would fire, as a shareholder, I would fire my chief executive if he gives up 120% return on investment, just substituting that, saying he's going to go and look for imports and then bring it in and manufacture and then start trying to navigate consumer demand. It's just a waste of time. Just put the money in there. I think that that's what makes more sense. So that's why I'm starting with the global economy. Then we'll narrow it down to the Nigerian economy, and then we'll look at the current administration. Next slide, please. Okay, well, next slide. We're all familiar with, I'm going to go through this very quickly. I think we're all familiar with this. We understand what happened in the global economy since 2019, following the COVID-19 epidemic, the resultant supply chain disruptions, that led to higher energy and commodity price rising, central banks of different countries, unprecedented increase in rates. And just as the global economy was, of course, many companies, the global economy went into recession. And just as countries were coming out of the COVID-19 issue, the Russian-Ukraine war started and took us back to the same issues, rising supply chain disruptions, a rise in inflation, and then those interest rates kept rising all across the world. And this particularly mattered because it affected a lot of the things we are doing domestically, and how that is going to, what comes out of that is also going to be important with what's going to happen in Nigeria in the near and longer term. So, next slide. But in 2023, the global economy is going to be shaped by the following dynamics, and I'll focus on two: the continuing geopolitical tension between Ukraine and Russia on the one hand, and I get Russia and the more advanced economies on the other hand, particularly the European Union and the US. You can see that Russia is now trying to partner with the other BRIC countries, and they're all trying to see if they can challenge the US dominance, and all these things matter, the US currency and so on. I don't think that will happen, but those are some of the tensions that are going to shape the next, the short to medium term as far as the global economy is concerned. What is going to happen with inflation and what central banks around the world, what they do about this. And of course, there's this increased deglobalization where countries are now looking inwards, and they're basically saying, we are more interested in what happens internally. Next slide. More recently, in the first half of the year, I think the consensus is that the worst is probably over. The global economy has been growing since the beginning of the year, combining the first quarter GDP numbers of various countries in the world, as well as looking at the global PMI results. You can see that they've been going up. And even though the growth is slower than it was in the previous year, and some analysts are even expecting global recession. I don't agree with that personally. And the reason is, what I see rather is the growth rates that have been recorded by most countries in the world are just basically similar growth rates that were exhibiting before the pandemic. So when you see 2-3% growth, it's exactly what they were growing before the pandemic. So there's nothing really different. But people are comparing it from the 5-6% growth rates before the pandemic, and it's coming down to 3%, and people are thinking that is a sign of a slowdown. I don't think that is. I think the global economy is just returning back to normalcy, and that's what it is. So I don't really, while a few countries are threatening recession here and there, I don't expect that to be a global phenomenon. You can also guess by looking at the same time the global economy is slowing down, employment generation is growing. Now, if there was really a contraction in the global economy, we expect fewer and fewer jobs to be created. So jobs are being created more and more. It's not consistent with a slowdown in the global economy. That's another reason why I think this is just more of a returning back to normal level. So the economy is expanding despite the continuous Russia-Ukraine war. Supply chains are still disruptive, but they are improving significantly. The interest rates being hikes that have been introduced by most countries in the world are continuing, but they seem to be having an impact. Next slide, please. They seem to be having an impact on. Sorry, can you go with the previous slide? They seem to be having an impact, finally having an impact on reducing inflation. So most of these countries across the world are finally seeing a reduction in their inflation rates, even though they are still significantly higher than their recommended levels, but they are still much higher, but they are coming down. And the advantage of that is as they start to come down, you start to see that either the rates would, the level of, the pace of the rates will slow down, or they might actually reverse. I don't expect that to happen this year, but from early next year, I expect those rates to be coming down. Next slide. Global trade has also improved. One key development that I highlight here in the global economy that I think has an impact on Nigeria is the decision of OPEC to cut oil production and minimize and reduce Nigeria's quota to 1.6 million barrels per day now. The implication of the official objective of OPEC, or should I say Saudi Arabia, to be honest, because OPEC is really just Saudi Arabia. They say they are trying to keep oil prices constant. I think that is a bit more. I think there's more to it. I think it's just Russia and Saudi Arabia trying to stick it to the US. I think that's also part of it. You are blocking. Russia is basically saying you are preventing us from giving us a lot of challenges. So we're going to create challenges for your economy. We're going to let the price of crude go up, and then a lot of people are going to scream in your country. You're going to have a lot of problems. So we are going to give it back to you the way we can. I think there's a bit of that as well, because there was no basis for the cut. The prices, if we look at oil production and oil prices, they were more or less stable in the last few months before you took that decision. The good thing about this is that it has not affected prices significantly. In fact, if anything, the prices has reduced slightly. All prices, but the implication for Nigeria is two. One, if the oil prices don't go up, then there's no benefit really to Nigeria in terms of that. We have missed the period of high oil prices. And even if the president is able to fix the oil production issues, which he seems to want to tackle, he is constrained by the OPEC quota, and it's very close to that. We are producing about 1.2, 1.3, and 1. So yes, we increase our revenue, but not significantly enough, because we are constrained by that quota. Now, I think the next meeting is in November, and I guess hopefully we have our ministers by then. We have a strong delegation to go and fight this out in OPEC. It might be important for Nigeria to consider or threaten to pull out of OPEC if it has to, because the president's policy is talking about 4 million barrels in 4 years. If we have a quota that is restricting us to this. However, before we can even do that, we have to even get to we have not even gotten to the quota figure yet anyway, so I guess that's not even something that we can go and argue, but I think it's something we should take into consideration. Next slide. Okay, now coming back to Nigeria, now I'm going to go through this very, very quickly, just to save time, and I think we all understand this. Nigeria's potential, that's why many of us are here involved in business, for economic growth next slide please, is well recognized. We've talked about this potential for years. Yes, almost everybody, anytime we want foreign investors to come in, I'm sure this slide comes out in all our reports. And there are facts. I'm not saying they are not. I'm not sure we are still the largest economy in Africa with the devaluation, I guess that's hitting. I think we're probably number 3 now. Behind South Africa, but I guess it's at the end of the year we'll get those numbers. And it depends on whether they're using PPP or just nominal GDP. But anyway, we're one of the largest economies in Africa. The abundance in resources, we've heard this many times, natural resources. We all know this. But the next slide, the challenge is that despite these huge potentials, we've never been able to realize that potential. And I want to quickly, and I want to break this down into 4 main issues. One is obviously is over reliance on oil. Years of political instability since 1960. We've just been starting and stopping and starting and stopping. We've not really had, unlike many of the countries in Asia, had that period of consistent, uninterrupted growth. Someone comes in and disrupts the process. We stop developing plan. All that keeps happening. And even though we've had some form of democracy since 1990. I did say I could be controversial. It's not really, again, it's not really focused on growth. It's always, it's been very, very disruptive. Even when the parties are the same, the policies completely completely different. So again, you need to have that consistent process of growth, which we have not really had. On forced errors, and that's basically, I think that's obvious. That's based on us when I was in government, not anymore. Just taking wrong decisions, wrong strategies, horrible policies, and even when industry experts and players are telling government this is the wrong thing to do, we tend not to listen. And even when the result is going negative, and when we tend, in fact, that's where we even stick up. The more negative it is, and the more businesses complain, the more likely we're going to refuse to change it. And that's what we have been doing. And that's on that major issue. And of course, external shocks that affect everybody in the global contagion and so on. But I classify this more as, I believe that all these are just symptoms of a more serious issue. And that's because I believe that the Nigerian economy is dysfunctional. The structure of the economy is dysfunctional. And until that dysfunction is fixed, we're going to continue having all these other things that keep us going from start to stop to start to stop. We're going to continue until those issues are fixed. What do I mean by macro dysfunction? Next slide, please. This is how we describe the Nigerian economy. We have an oil and gas sector contributing, again, we have seen this before, 8%. It's actually lower now, it's about 6% now. And the non-oil sector has 145 economic activities, contributing 92% of GDP. So technically, the economy by this is well diversified and should not be affected by shocks, particularly in the oil sector. But in reality, next slide, the economy is better described as a house on three pillars. Where again, you have the oil sector contributing 7, 6, 8% of GDP. Then you have a portion of the non-oil sector significantly dependent on the oil sector. Manufacturing, for example. So that means and this is contributing 55% of the economy. So even though they're not all activities, manufacturing is not an all activity, trade is not an all activity, but they are dependent on oil, the receipts from oil and so on. So whatever happens to the oil sector has a significant impact on the entire operation. So you actually have 62% directly and indirectly dependent on what happens on oil, and to an extent, you're not in control of the oil prices, and more recently, you're not even in control of oil production as well, but your 62% of your entire economy is dependent on oil. Now, then you have the third portion of the non-oil sector that is not significantly dependent on oil. For example, your telecommunication services, the services part of it. What they call this, entertainment and recreation, and so on. Those sectors are not, but they account for only 38% of the economy. So when you have a problem with oil production, oil prices, only 38% of your economy is actually able to sustain that economy, and everything just gets disrupted. And that's why since 2015, Nigerian economy has been growing in this slow, fragile state because the oil sector has been in contraction for more or less the entire period. Next slide. So that's why you see there's almost a 92% correlation between the trend in the oil output and oil prices and the GDP growth. They're almost matching each other perfectly. And that's because of the links between the two. And it's also why Nigeria has not been able to leave the recovery state. Now, when you get into a recession, we have had two in the last 8 years. You come out of recession, that's the first stage, economic recovery, and then you take off. We have been stuck at the economic recovery stage throughout. And that's because, again, oil sector has remained in contraction through the entire. So the link between the oil sector and the entire economy is so strong. And that's why I believe it's completely dysfunctional. And that dysfunction has to be fixed. Otherwise, we're going to be dependent on what happens in that sector. Next slide, please. Okay, and that brings us to the challenges that you're all familiar with in the macroeconomy. Slow, fragile GDP, high debt service, high inflation, high interest rates, and so on. Next slide. You're all familiar with the macroeconomic challenges. Now let's take some of them in more detail. If you look at the slides on the top left, you see the growth trajectory, and I'll explain why. Where we have moved from a period of average of 7.7% to 6.0% to about 1% in the last 8 years. Now, I'll explain that later in terms of the strategy that government decide to take and why the new administration, based on what they are saying, might actually reverse that. In Q1, more recently, in the first quarter of 2023, the economy contracted. And why it was, again, the CBN money, the CBN cash, Naira redesigned, the Naira redesign policy that caused that. In fact, I'm surprised. I expected it to be more significant than that. At least now I understand why some of you used to raise eyebrows when you see NBS statistics. Then I didn't understand it. Contracted, again, that had to do directly with cash. All production improved slightly, also in Q1. I am expecting the economy to end the year about 2.85%. If you look at the lower left, you will see that, and that's the Nigerian PMI trend. You see that, well, that was the below 50 point was the Naira redesign policy. You can see that growth has slowed down, according to the PMI, in the second quarter, but it's still positive. So I still expect positive growth, probably between 3 to 3.5%, and that's just based on the PMI trends. Next slide. Yes, now this is what I was trying to explain. Now, this is your, as you all know, this is your GDP, your household consumption, your investment, which is broken down into private investment and government investment. And government investment, of course, infrastructure and the other things. Government expenditure, running government affairs, and of course, net exports. Now, in the previous strategy, post the Buhari administration, the strategy was focused on consumption. Government focused on consumption. It allowed the economy, the private sector to lead. So your growth was being driven by household consumption expenditure. It was being driven by private investment. You will see that compared at the bottom lower left, you see the growth drivers 2007, 2015, and then from 2016 to date. Household consumption dropped from a share of GDP dropped from 4.7% to 2.8%. Investment also dropped from overall investment dropped from 5 to 2.2%. Private investment was about 4%, contributed 4% to GDP over that period. But in the Buhari administration, it was just 0.26%. Now now government investment in the previous in the pre-Buhari administration was just contributing 1%, but it jumped to almost double 2%. And government expenditure that was contracting in the previous administration. So what happened is government became the largest share of the economy. But government investment and government expenditure is the smallest share of your GDP. So you sacrifice the smallest share of your GDP. Sorry, you sacrifice the bigger shares of your GDP, your household consumption, squeeze consumption expenditure, squeeze private investment by increasing taxes, by finance acts and high inflation and subsidy removal. What the subsidy doing now? But you squeeze household consumption, you squeezed private investment. Interest rates were very high, cost of production was very high, to get money for government to spend in the economy. So yes, government spent on the economy, but at the expense of the bigger and arguably more important aspects of the economy, and that's what kept your growth at 1%. So I think the strategy was just off. And how did government increase its revenue? One, increase taxes, squeezing from households and squeezing from business, and then borrowed. And then by borrowing, also increasing the interest rates, also squeezing your cost of financing, making it harder to invest. And why would you invest anyway when household demand, consumption is going down? Who are you investing for? You invest, you expand your businesses to meet demand. So if demand is being squeezed, and you can't, whether domestic demand or export, there's really no objective of producing more. Otherwise, your inventories will just go up. So that's basically was the issue. If you look at government share of growth, was contracted 3.12% in the previous regime. During the Buhari administration, went to 6.9%. It crowded out the private sector completely, and that's basically is very important in terms of government strategy to look at this and understand what government is doing. You cannot. There's nothing wrong with government investing in the economy, providing infrastructure, but it cannot be at the expense of squeezing private investment and squeezing household consumption. Now, if that's where you target, you're going to create a problem for the entire economy. Next slide, please. Okay, I think we all know the story with debt. I'll just tell a quick story as far as this concerned. I think we've understood what happened here. From 2015, the deficit kept rising, and there was a reason. We entered a recession. We felt we needed to spend. I was still in government at the time. I was in the economic management team. We felt we needed to spend our way out of the economy, but our revenues were very low, and we need to spend. So, what we did was, but the Fiscal Responsibility Act says the difference between your revenue and debt can't exceed 3%. So if you want to spend 10 trillion from 3 trillion, you have to increase your revenue. So we just artificially pushed up revenue. And when I say artificially, I was in a meeting room where people just sit down. There's someone with a computer. Okay, what's the deficit? We want to spend 20 trillion. Okay, we need 17 trillion to stay within that 3%. Okay, where are the revenue generating? CBN, what's your operating surplus? We are giving you one. No, make it 2.5. I'm actually serious. It was just arbitrarily done like that. And then when it entered to what is left? 14. Okay, what else? So you are just jacking up revenue artificially and giving targets that, well, of course, not going to be met. And then you get your revenue expenditure to that level, and then government says, and then implement the budget, and then the finance ministry says, okay, goes to CBN and says, we're expecting 8 trillion in revenue, even though that 8 trillion was largely fictitious. Pending when the money comes, just loan us the money, and that's where you got your ways and means. So CBN says, well, 7 trillion, we'll get it, don't worry. Loan us the money. So CBN loans them the money in line with the fictitious revenue that was expected. It obviously did not come, and that's where ways and and then the next year we did exactly the same thing, despite the fact that we did not meet. Next slide, please. You can check this. Despite the fact that we never met the revenue target, we increased it even further. Now you can imagine if your businesses are doing that. You have a target of income of 10 billion, and then you get 6 billion. The next year you make your target 15 billion based on nothing, despite the fact that the economy it was just a way to increase expenditure. In fact, it was a way to bypass the law for expenditure. It wasn't because there was any belief that those revenues were going to come. So we kept on doing that over and over again, and that's why we got where we are. I think we all understand that. Next slide. Since 2018, inflation has continued to shoot up significantly. Most of it has to do with, structural issues as well as money supply. When you're injecting 23 trillion into the economy, it's going to affect the economy. But the main cause of inflation in Nigeria was less demand pull and more cost push. It was mostly cost of production, structural distribution issues. But then the monetary authority decided to target demand, even though the problem was supply. And because of that, they started increasing the MPR rate, increasing your cost of financing, and you can see that it had no impact whatsoever on pulling down inflation. If you check the trend on the lower right, I don't know if it's clear, you can see that there was almost no impact of the increase in MPR rates for over 2 years on inflation. Inflation continued increasing, and that's because they were targeting the wrong thing. Next slide. I just explained this. That's why Nigeria, you can see Nigeria is one of the only countries that kept on increasing its MPR, having no impact on inflation. Again, it's not, I think we just follow what everybody was doing. We should have done a study to first understand the causes of inflation in Nigeria. Otherwise, I remember speaking to someone high up in CBN, and I said, this is not the cause of inflation. What are you doing? And the response was, he didn't even say the policies are right. He said, or she said, so I don't, look, what do you expect us to do? Inflation is right. Do you expect us to not do anything? So you are agreeing that this policy might not be correct, but you are saying, well, we have to. I said, yes, I expect you not to do anything, because sometimes doing something might make the problem a lot worse. And not doing something actually is a policy choice. So don't do anything if you know what you are doing is not going to fix the problem, it's going to create it. So this is the kind of way we sometimes think in government. We have to do something where the monetary authority, the inflation is going. Should we just fold that? Yes, fold your hand, because there's nothing that is not in your control. If fiscal policies throwing money into if the problem is not cash, then what are you trying to pull cash? Which cash consumer demand is already constrained, and you're trying to pull out more cash from constrained consumer demand, you're hitting the business, you're hitting the economy. It makes no sense. But this is the kind of decision I was doing. But like you see, Nigeria was the only country whose, for now, inflation has not been affected by the increase in monetary policy rate. Next slide. It's just beginning to explain that you can see that most of the causes for the increase in inflation has been food prices and related transportation prices. And I'm mentioning this in line with the subsidy conversation we're going to get to. Most of inflation is driven by transportation, fuel prices, and food prices, and they're all interrelated. So if we are trying to pull down food prices, that's what we should be looking at. Sorry, pull down overall inflation, that's what we should be trying to look at. Subsidy was removed, and we all know the prices went up almost by 200%. It is going to have an impact on inflation. I'm expecting maybe about 25-26% at the next inflation. But I think by next year, when base effects kick in, it might start to slow down, but it's going to still remain high double digits, at least at the end of next year. With the CBN push up, the CBN is more likely in the short, medium term to increase the NPR rate, or at least keep it constant, as opposed to taking it down, because the inflation rate is way too high, and that's the only tool they have at their disposal. And with all the policies being introduced that are likely to push up the inflation rate, I don't expect that to come down. So interest rates are likely going to go up. Also, to attract foreign capital, they are concerned about the negative real interest rates as well. So it's going to be interesting to see so they need to bring down inflation. So it will be interesting to see what they decide. But I don't expect those rates to come down in the short to medium term. Next slide. Exchange rate movements, it has been discussed already. Of course, you have achieved convergence following the decision to allow the market to determine, to an extent determine, but that was just initial steps. If you look at the top, well, the market turnover chart, you see turnover has not really significantly changed, despite and that's because of supply. So it's one thing to allow the market determine the rate. It's not significantly going to affect inflation because businesses were mostly already factoring that into their operation. That they're buying the FX now at more or less the same price they always were. It's just that now it's more official, but it's about the same thing. So it's really not going to significantly affect inflation. But in terms of turnover, the turnover in the market has not significantly improved. And that means for now, the reason why the expected inflow has not come. Inflow from FX comes from 5 sources. One is crude oil production, if you can fix that challenge. Home remittances, foreign portfolio investors and foreign direct investment. And I said crude oil already. And governmental enterprise, export-oriented companies. Now, in the past, export-oriented companies, home remittances were not coming in because of that huge gap. The idea is that because there's convergence, they have the incentive to bring it in, but they're not doing that yet. And I'm assuming that it's because of the volatility, the huge volatility in the market currently. People are playing the wait and see approach to see where it's going to end before they bring it in. And I don't think that volatility is going to sort itself out for the next few months until there's really a huge supply, and that's going to be a gradual process. So I don't expect, and as far as FDI is concerned, FDI requires a more advanced forwards market to be able to come in. But when the rate is so volatile, it's difficult for that market to develop. Why would if I am expecting the rate to come down, settle at 680, why would I give you a fixed rate? Agree with you that at 750, I'm not going to do that because I'm also expecting it to go down to 680. So again, FDI will stay out. Foreign portfolio investors are still arguing about negative real interest rates. I made an argument, non-technical argument. I don't see why they care about the inflation rate in Nigeria, because they're not spending their money in Nigeria. Inflation rate in your country is 4-5%, and you are complaining about the inflation rate in Nigeria to be 21. You are saying that you need positive real interest rate in Nigeria before you bring your money in. I don't agree with that, but I understand the technical reasons why you want a real, but I don't think it applies in this case. So they are still hoping that the rates will be shot, you shoot up, it will increase significantly. I don't think that's going to happen because that contradicts one of the president's objectives, is to pull down interest rates. So again, you wonder whether this money is actually going to, in terms of supply, going to come in. I think everybody, the rest of us that have FX in our accounts, are also just playing they are the traders who are playing the market, and those that are just using it to hedge against, it's more of an asset. They're not going to sell their dollars just because rates go to 800. That's not the reason they put the money in their accounts. So even if the rates go to 800, they're not going to make it available to the market because that's not what they are using it for. But of course, the traders are going to be playing the market. So substantial supply. You can see the supply. The turnover is not even close to the levels at 2021 when we thought the FX market was completely messed up. It hasn't happened yet. Maybe it's a matter of time. We check this next few quarters. Next slide, please. And one more thing. You can see the reserves have even gone down, which has gone down a little bit, about 3 billion in June. So in the 1 month that this policy has been introduced, the reserves are actually gone. That's not particularly surprising, considering that they are trying to clear the backlog and all the other things. I still have to expecting the supply to come in. Next slide, please. So in all this mess, we have a new administration. Next slide. In all these various challenges of lack of jobs, slow growth, high debt, limited revenue, insecurity, and the like, the new administration comes in. Next slide. And he's based on his party manifesto. Again, I have to warn that most of the time party manifestos and what elected officials don't always match. Although so far it seems to be matching his words with his action, but again, they don't always. So it's focused on economic growth, and we go through this: oil and gas, human capital, infrastructure, security. Most of the things that we have all said. By the way, when it comes to policies and plans, that's not the issue with Nigeria. We all know. Go and check all the last governments in 1999. They said exactly the same thing. They focused on exactly the same thing. Go and look at all the development plans. Exactly the same thing. I don't think anybody has come up with any unique thing to do. It's more or less the same. So it's always the implementation. And I always say that when people get excited about a particular leader, I always say the people that are going to implement that leader's vision is the public service. If the public sector is weak, you're wasting your time because they don't have the capacity or the willingness. And there are two different. Willingness is you are trying to disrupt their operations. That's where willingness is. And capacity is, even if they are not affected, are they able to do this? So you can come out with the most brilliant minds and the best ideas if it's implemented badly. And that's exactly what has happened all the time. The implementation is always the problem, not the policy. So I try not to focus on, in fact, the two key decisions, reforms that have been made, which I agree should have been done, subsidy and FX, hasn't been implemented properly so far. So again, that's just showing you an example of some of the challenges we have in the place. The right decision, agreed, but there are certain other steps that have to be taken to support those supporting structures that have not been done. We did it, everybody was praising, clapping, and we didn't follow it up with the necessary steps to keep it in place. And if we don't do that, after it's going to reverse the whole thing. So it's a bold, ambitious, correct decision, but it has potential landmines. You're either going to get it right, it's very, very risky, and if you don't get it right, you're going to mess things up even worse. And that's why the supporting structures are very, very important to entrench those reforms. Next slide, please. I think we can go through the policy trust. Please can go through this as well. I think we understand it. I think I want to summarize the president's approach to be, unlike the previous administration that was more statist, socialist in nature. It didn't believe in private sector. In fact, it saw private sector growth as anti-business. It wasn't hidden. It was clearly stated. If you had too much money, you are a thief. Why do you need more? I'm actually being serious. Why do you need more money for what? Aren't you surviving? Live within your means. Why do you want more? That was the way. Give everything to the poor. That was and I'm not saying that strategy is anything wrong with it. There are many countries that have actually, a few countries, not many, that have actually adopted that approach and succeeded. Most haven't. So I'm not talking about this. I don't believe I'm an economist, so I don't believe in that strategy. But that was there clearly there, and we see what happened in the economy. That was clearly there. Now, this current administration is clearly more private sector driven. If you listen to the things he has said, the manifesto is more private sector development. We want private sector to lead, to drive. We want to reduce taxes. We want to harmonize taxes, backward integration, public-private partners. Those are the things that we're hearing from the new administration. So there's a different, and that's why the market actually reacted to. I think whoever won the election, the markets would have reacted. Most people try to say it was because of the particular president. I don't agree it was him. I think any of them, because they all said the same thing. All three of them were private sector led. The market responded to elections, ended peacefully. All three candidates were private sector led. They were good. That's why some of them are saying he stole my idea, he didn't steal my idea. Because they were all saying the same thing. It's a case of I said it before you. But they're all saying the same thing. And that's why subsidy, you could see people could not, the others, ordinarily you will see the opposition come and use that to fight. No, they couldn't because, well, they will say you said the same thing when you were campaigning. So that's what the market reacted to, the private sector led leadership. And that's what we are going at. So I think all the policies you are going to see, including the ones you have seen, is going to be geared towards, over the longer term, trying to get private sector to lead the economy. I think that if done successfully and implemented properly, we might actually get it right for a change. Fingers crossed. Next slide. Next slide, please. Before I end, I just want to focus on some of the, just to get an indication of his priorities. The manifesto is a lot of things, but I try to look at some of the key things that were said in his inaugural speech that I think would define his immediate priorities, and you can see some of them has already, as if he's ticking the box in regard to these things. One of them was removal of subsidies, the exchange rate, lower interest rates. He wants average, he's targeting average GDP growth rate in his first 4 years of 6%. I don't really think that's possible. Tackling multiple taxation, and he also mentioned commodity bonds. I just take them one by one. Next slide. We understand the impact of removal of subsidies. I don't believe that he intended to move it that quickly. I think that was just a slip. And I understand. You've been trying to be president for a very long time. You finally gotten it. I think he was just excited, and because he was not in the speech, and he just, it is different. When you are when you are campaigning, there's a way you talk when you are campaigning. You're trying to whip up claps and sentiments, and he forgot. And you are now the president, because he has said this many times. The market didn't care, but this time he said it as president. That's different. And you could see immediately he said it. They were initially trying to run around but they realized that gone. So everybody just okay. It was deliberate. No, it wasn't deliberate. The market still had about how many months? 1 month, end of July so he could have taken his time to put all the supporting structures in place before. But again, so I think that was the issue, and it has led to increased inflation. It's going to lead to increased inflation. Most people have said they don't expect inflation to increase, food inflation, because it is diesel trucks that bring, which is true, but over 90% of businesses in Nigeria are micro, small, medium. They use fuel generators. So it's not. We have to be very careful who is affected. So you might bring your food from the rural areas into town, but within the town, you are moving around in your PMS, and that's going to push up inflation. And even if you tell them to switch to gas, there's also this initial cost of switching to gas and getting all that done, and whether they can even afford to switch to gas and switch. But majority, 90% that provides about 50% of more than that, about 80% of employment is micro, small, medium scale enterprises. They are definitely going to be affected by the price of PMS. And in addition to just your staff moving up and down, I can bet half of the people in this businesses in this room, their staff are looking for ways to ask for increase in salary, including myself. I've written my own. Yes, because they just can't come to work. It's just as simple as that. And when you increase their salaries, you are going to see, depending on what you produce, you are going to try and pass those costs on to consumers. So those of you that are producing goods that are priced inelastic, you're fine. They have no choice. When we did a study with MBS when households are faced with this kind of shock. They do the first three things. The first thing they ask for support from family and friends. That can't work this time because all of us have the same. The second they do is they rationalize expenditure. So they start trying to look for cheap substitutes, cut out expenditure. So anything that is discretionary is if your goods are discretionary and you're not producing them at the minimum cost possible, you're going to lose your business. You're going to lose demand. That's exactly what's going to happen. Palliatives are not meant to fix the problem. By the way, they are meant to keep everybody. It's not even meant to cushion anything. It is more a way to keep people from resisting the reforms. How does giving 85,000 naira to poor households a one-off, or if it's not going to change anything? It's just to keep everybody quiet. The things that are going to change things are more longer-term investments, infrastructure, and so on. But nobody's talking about that for now. What we're trying to do is just shut everybody down and give them something, make them, okay, we are taking your subsidy from you, even though you are not really benefiting from it. Oh, by the way, one more thing. The people they are even targeting, the rural areas, is right. The rural poor are not the ones using subsidy. We all use a lot more fuel than they do. We go from here. From here, I'll go to the office. I might stop to go for lunch. On the way back from I stop in the supermarket. The poor go maybe once or twice a week to the market and come, but they're not consuming as much food anywhere close to. That's the rural poor. The urban poor, on the other hand, are going to be significantly affected by this. They are the ones that, and they are the ones that are not in the social registry and the other things that government wants to give. Increasing salaries, that's of the salaried workers, not the majority of the informal sector workers are not going to be affected. So there's nothing cushioning there. And even if you increase salaries and give 800 million, you might end up just worsening the problem because you can stoke further inflation. So you're adding more cash, you're increasing salaries by whatever percent. By the way, minimum wage has to go up, not because of subsidy, but because it just has been going up for a while. But if you are trying to push up salaries to cushion by injecting cash into the economy, you are just pushing up inflation. And then the challenge, you are trying to counter less cash-based palliatives or interventions, like tax breaks, reduce taxes for businesses, reduce taxes for, now that doesn't add cash into but it retains your purchasing power because now I have more, I've not increased money supply per se. I'm not giving people cash to those toss in the market. So reduce taxes for individuals so they can still continue buying the same level of goods they were. So you are buying 10 before, because of inflation, I can only buy 5. Reduce my tax, they have more money, I can buy 10 with the same amount of salary that I was getting before. That's basically the idea. It's better. And then things like electronic, why can't we use electronic transportation system, e-voucher, things like that, where the urban poor can, it's very easy. We all have mobile phones. There's a code that's given you register, you give you a code, you give the code when you're entering the public transport. At the end of the month, it's very easy with technology. The operator can go and collect his money from government and things like that without putting cash into the system. Of course, the obvious investment in health, education, mass transit, all the other ones we always talk about. I think that's the focus of palliatives if it's introduced. And again, you are trying to maintain businesses on two sides. Businesses have two problems. One, on the left side of the equation, the demand for their products are going down. At the same time, the cost of businesses are going up. So you are squeezing margins. You have to understand the palliatives. You are trying to fix it on both sides. Next slide. I have to move really quickly now. I think I've spoken about the exchange rate. There are still some additional steps that need to be taken that have not been taken to make it more sustainable. I don't think it's sustainable at this point. There are still 41 items that are banned. The forwards market is not fully developed. We are still not attracting that inflow yet, and we're hoping that will come in. Next slide. I don't think this is possible in the short term, although I don't think it's possible in the 4 years of the administration, maybe in the final year. So I think this is going to take a while. That's why you can say I didn't even say anything much about it. I don't know how you're going to get to single-digit inflation from where it is currently. It's not by fiat. You don't just You can't just announce 8% inflation rate is the interest rate. It's not going to happen, especially with inflation, with all the other things you are doing that is pushing up inflation that has to be controlled, not in the medium term. So I'm sorry, your cost of finance is not good. It's not expected to improve significantly in the short term. You have to work that into your models. Next slide. I don't think this is possible. It's just not because not even in the 4 years. You already lost the first year, the second year. You are doing the reforms which are going to be painful, that are going to squeeze your growth, your consumption demand, going to increase business costs. It's not going to help in terms of GDP growth. So I don't expect a 6% average growth in 4 years, maybe about 4% at best, maybe 4.5%, because consumer demand is being constrained significantly by all the policies that have been introduced have the impact on squeezing purchasing power so far. Whether it's finance bill, whether it is the unification, or whether it's subsidy, all of them is squeezing consumer demand without next slide, please. Without and lowering purchasing power. This should be easier to tackle, the multiple taxation. Actually quite easy, but also requires seamless working relationship between the states and the federal government, probably to the neck, but it should be easier to do. But again, it requires the president, and he's very good at that, creating that consensus between, he's a deals person, which is also very positive. So he knows how to negotiate and work with different stakeholders. So I think this should be possible. Next slide. I don't agree with this at all, the commodity board, because that basically just, if this is, I was surprised this was part of the initiatives of government wants, because this basically means the federal government is going to buy all the agricultural output and then supply to the market. We know the government is not efficient in this at all. That's just a cost. We're going to have on that problem. Government has no business, should not be involved in this. I would have preferred they focused more on providing or creating the policy to provide, like you mentioned, storage facilities. Because half is not, the problem we have is not agricultural output not being enough, is that half of it is lost. So while we're expanding agricultural output, we should first focus on safeguarding the one that we currently produce with storage facilities, as opposed to saying that we want to guarantee prices for the farmer, which is okay, but government now distributing that output to the public is going to create a mess. So I don't really agree with this, and I don't see how it's going to be implemented. Next slide. Okay, so I think I've gone way above my... so in the short to the medium term, I do not expect your businesses to have a great time. Like I mentioned, consumption demand is good. Inflation is going to shoot up significantly. Consumer demand is going to be squeezed. Purchasing power is being squeezed, and your cost of production is going to go up as well, depending on the sector that you are. If you're in the financial sector, it's actually going to be very positive for you. You have extra income from higher interest rates. You have extra income from FX trading and so on. So depending on the sector you're in, and depending on the model of your business, if your business is very import oriented in nature, you're going to, in the short to medium term, you're going to have challenges with FX supply and FX rates. So I don't expect short, medium term, I think for the economy is going to be very difficult. Like I mentioned at the beginning, I think it's more about trying to stay afloat and trying to keep, the strategy is more to keep your businesses functioning, minimize cost as much as possible, and try to retain whatever demand you have, because you're having a lot of competition, particularly also from now that we have relaxed import rules and so on, apart from imports as well, which might be cheaper, because now you have high prices domestically. It's creating that issue where it's making imports, it might make imports cheaper and it can come in easier. So again, depending on which sector you operate and what businesses you provide, I expect depending on the design, the structure of the palliatives, either way, I don't think it's going to be significant in terms of improving the economy. It might just minimize things slightly. I think that government needs money, and they have started well by removing subsidy. That's more expenditure management, but they need to collect more money. So I think you're going to have situations where taxes have to go up, or debt has to increase, or both. There's just no other way for the government to generate any more income. So I expect they're going to start increasing, fully implementing the Finance Act, possibilities of widening the tax net, or even increasing taxes of your current business, which also pushes up prices. Also, possibility that they're going to increase debt, which puts question marks on the cost of financing. So I think I've covered everything. I think regardless of what your business is, you're going to have problems with consumer demand as well as cost, and is to find ways to minimize cost as well as to retain your consumers, depending on whichever sector and businesses that you operate. Thank you once again for listening to me.
Thank you very much, Dr. Kale. Please come to the horse seat. Here, the bullet is going to that side. There is something that he said which I was not expecting him to say, because my MD is here and I have 2 EDs here. He said, what is happening affects all of us together. I was not doctor. I was not expecting you to say that, because the implication is that when I go to my MD tomorrow to say, MD, hey, Joel, give me some 10,000 naira to supplement. He said, Ayo, Dr. Kale, authority. I said it affects all of us together. So it doesn't affect all of us together. People have wall chests, shock absorber. Thank you very much for, please let's put our hands together for him again. Okay, so I have few comments, and then we will then just few comments and 2 few questions. Now, you talked about the challenges in the immediate term, and thank you, I like the what the economists call the expenditure approach to GDP that you brought up, which you talked about how the drivers of the economy, where it came from, government expenditure, as against where it should have been driven by consumption, household consumption. So now, from what you have said, we saw consumption, the contribution dropping substantially. Now, if firms, businesses are trying to cope with the rising cost of everything in the market at the moment, they are grappling with input cost, FX, operating expenses, and all of those things. And then you also talked about the fact that interest rate is expected to go up because monetary authorities will want to say inflation to tame it. Now, I am thinking, looking at the development in the stock market in the last 1.5 months, responding to the private sector, expected private sector led economic growth. Do you see a situation whereby there will be a rise in IPOs, initial public offering, to allow governments, companies to go to the market to go and raise equity as against increasing so much on their debts, as a way? 2 things. Number 1, to deleverage their balance sheets, and number 2, to ensure that because the consumers, like you said, depending on how elastic the product that you, let me say it in a layman language, how you are able to shift the cost increase in your production to the final consumer. But the consumer purchasing power is battered at the moment. So they may want to say, where do we reduce costs? So do you see a rise in IPOs on public offering? Access Bank price went from 9 naira to about 18 naira. And therefore, if they want to raise, say, for instance, 1 billion naira, perhaps the number of shares they will now need to issue will be lower than about 2-3 months ago. So do you think companies, and even private companies who are not listed at the moment, do you say that we want to say, let's go to the market because of the improved valuation now to go and raise equity capital as against increasing our debt as a way to reduce, to minimize cost?
I'm sorry, I was taken aback by the Access Bank 9 to 18 naira.
I just used that one as an example.
I'll go and check, because when you were talking, I didn't even hear half of what you said after you said that, because all I was thinking about was I was forced to sell my Access Bank shares by KPMG as part of their policies. We're not allowed to have shares in companies you operate. I'm just thinking, oh my goodness, I lost 100%.
But I can't have your cake and eat it.
Well, I would have loved to have it, and but on a more serious note, I don't think I'm having a minority opinion here, where I don't think the only reason why the stock market increased was because of a reaction by investors' expectation of the private sector. I think it was more, if you notice, it was more after the FX was relaxed, and I think it was more speculation. They expected inflow by foreign portfolio investors to come in. So before they came, they wanted to go and hold positions, expecting capital to come in and to push up the prices. And since that hasn't happened so far, you probably start seeing it starts going back down. So I think that was just I think it's too early for investors to say, oh, the privacy is still a lot that needs to be done for. So I don't think that reaction was really the market responding to apart from the banking sector, which people expect revenues are going to shoot up as a result of the policy. I don't think that was the major reason. But yes, as you know, companies when they need capital, they have those two options: debt or equity. And if as equity becomes the cheaper option, they're going to shift to equity. It's simple business decision. You will find that higher interest rates. But again, it depends on the nature of the business. Depends on where the proportion of the proportion of their debt is foreign based, for example. Either way, they'll probably be taking more foreign loans as opposed to domestic, because domestic interest rates are higher, even though foreign interest rates are not, as long as the FX rate is stable enough. So it depends on the business model, but I expect that businesses that have a large component of domestic debt will start reconsidering doing a lot more IPOs, because that's, for now, equity seems to be a lot more cheaper, much cheaper option to raise capital, to expand, and to run their businesses, or just to swap and reduce costs.
Okay, thank you very much. Now, what do you think that we need FPIs? And one of your slides shows that the global FPI is going to reduce this year. Now, and I also know that certain countries may likely benefit from the FPIs, some will lose. In Nigeria, what do you think we need to do, or maybe the government needs to do, to ensure that we attract a fair share of global FPIs? In the last few years, the data from NBS shows that it's been declining, but is there anything that could be done to change that trend?
Well, capital goes to where it is most attracted. If I can get 20% in Ghana, all risk taken into consideration, and I can only get 7% in Nigeria, I'll go to Ghana. So it's the only way you can attract. You said FPI, not FDI.
Sorry, FDIs.
Oh, FDI. Okay. Yeah. FDI is more of an issue of first of all, you have to fix, like I said, forward contracts. When FDIs come in, they are coming for 10, 15, 20 years, and they want to be ensured they can repatriate their profits when they want to. I think we have done that already. We have guaranteed the repatriation of dividends and things like that. That's one step that will attract them. The second step is to ensure that the forwards market works very well, so they can take those decisions. And I think the most important one, which actually was already discussed, is fixing the ease of doing business. At the end of the day, the objective of a foreign of FDI is to maximize profit, and they'll go to the environment where their profit is going to be maximized. And if, because your cost of operation is very high, because your cost of doing business is very high in Nigeria, you're not going to attract anybody into the country, and that's just the truth. So improve your cost of doing business. He mentioned some of them: infrastructure, both physical and social infrastructure. He mentioned health. He also mentioned education, but I was not even looking at education in terms of foreign investors. I'm talking about one of the challenges that a lot of companies have in Nigeria is attracting good enough talent to be able to operate. So if I'm a foreign business that wants to come to Nigeria, I want to ensure that my cost of operation is low. I want to ensure that I have the demand, which we already have. And I also want to ensure that we have the capacity domestically for running my business. So yes, invest in infrastructure, power, roads, the distribution network, in social infrastructure as well, health and education, the rule of law, to ensure that contracts are going to be honored, the law actually functions properly. Other ease of doing business issues, either all the approvals and documents they have to get, you make it seamless, make things easier to get. And I think once you fix that, in an environment where there's potential demand like us, where people know they can come and produce easily, they can import their raw material and repatriate their profit easily, I think that would draw in foreign direct investment.
Okay, thank you very much. Before I go to the people who are here, I'd like to take this question from one of our online participants. He said, As Nigerian enters a new growth phase, what are the key challenges and opportunities for fintech companies in terms of driving financial inclusion and expanding access to financial services for the underserved? Are there any specific areas you believe fintech and tech ecosystem can make significant impact?
I think the question actually answered itself. It's basically to expand the. I think currently, the penetration is about 50% or just a bit under. I think the advantage of fintech companies is that they are better able to get closer to the unbanked. For example, there are lots of people, and I think the way the world is going, the way that Nigeria is going, you get to a situation where you have to increase the amount of people that have bank accounts, that have access to financial services, and I think that's where the biggest, in my opinion, where the biggest opportunity exists as far as fintech companies are concerned, providing financial services to a lot of Nigerians that don't have access to that currently, and that's not just banking services, insurance services. It cuts across.
Thank you very much. Let me turn on to the. Okay, thank you very much. Question.
Thank you very much. My name is Abiola Lawal, Aeroton Energy, DMD. I want to thank you again for a very comprehensive presentation. I want to get your thoughts on where the government should situate security for businesses. I think the previous speaker spoke about that a bit. And you also mentioned during your presentation earlier, for example, that everybody has consumer pressure this time. But there are some of us in the business where consumer is not our pressure. The supply is our pressure. I.e., if I produce enough crude, putting it out in the global market is not my problem. Who's going to buy it? It's my ability to evacuate from Nigeria there. And you also mentioned earlier, if you remember, about the 1.6 million barrels cap. So Nigeria's problem, from my experience, is really not so much about production, but particularly those of us in the swamp and onshore area, is evacuation. So I want you to please talk a bit about the focus on the government to be able to secure our infrastructure to transport hydrocarbon so that we can get the benefit of that. We're one of the few countries that have not been able to really take advantage of that hydrocarbon given these Russia issues. That's number one. And quickly, the second one, I've heard about this $800 million palliative borrow from the World Bank. Can we get it to the poor? Is that really a sustainable strategy even in the short term? I'd like your comment on that. And finally, real quick, I know there's a drive for revenue, tax. We've heard about 1,000 naira for example, to register your car. I heard also about VAT for informal sector. It just seems, again, more squeeze on that consumer space. And everything we know about economics says you don't keep taxing when there's so much pressure to begin with. You want to grow the base first before tax multiplies itself. So I'd like your comment on those three things. Thank you very much.
Regarding the first one, security, there's nothing, as far as oil production and supply is concerned, there's actually nothing big about securing the oil production. It's just the willpower. The security is about having the right will to do it. We all know that the reasons why oil theft is so horrible is because there's collusion between even the security. We know that already. That's what's going on. You cannot lose 500-600 million barrels a day. It's not the small guys puncturing holes. I mean, let's stop being ridiculous here. We know, and that's the issue. So it's not being secure because we don't want it to be secured, and people have interest in not securing it. And let's be honest, if you do the maths, 600 million barrels per day, that's coming to about $40 million a day. To be honest, you're going to have a fight. If you're asking, if you're asking me to give up $40 million a day in revenue, potential revenue, you're going to have a big problem trying to get them to give that up. They have enough resources to ensure they pay everybody, including security officials. One of the ways, and because we at KPMG were advising, I don't think this is confidential, one of the advice we gave them in terms of security of the oil infrastructure was that, first of all, you can actually use sensors to actually put sensors on the pipe, so if there's any breach, an alarm goes off in different sections, and then you can dispatch security to the particular. You can do that. So these things are not. No, it's not. It's just there's just no willpower. I even said that because the security guys are entrenched in this whole thing. Maybe you should get a situation where you are changing them every quarter, bring in brand new people. So before they are able to settle in and start, they have been taken out. Maybe that because when they start, it always happens in every administration. People get scared. The same thing happened with President Buhari when he came in. Even public service servants started going to work on time. Oh, new sheriffs in town. That initial thing, we know that. And after, when they realized, well, the sheriff's in town, but maybe he's not really in town, people went back. No, I'm saying that's a joke, but that's what happened. So that's why I'm cautiously optimistic about this one as well. The initial buzz is always there. It's always sustaining it. So as far as security is concerned, we know how to fix it. Get the security officials. They can nip this, they can catch them very effectively. Unless there's that will to ensure that the security officials, they put the sensors and are tracking it regularly and cutting it out, it's going to continue. Because there's a huge amount of money you're asking people to give up. They're not going to, it's a system. It's not, it's a well-established structure. You have to understand that. You can't take so many millions across the entire ocean and the Navy, nobody, it's not possible. I mean, we know it cuts across so many different people that are involved in it. So that's the only way it can be fixed. If there's a political will to tackle it and you have a president that is prepared to deal with anybody, I mean, if he tells the head of a security agency, if for every barrel of oil that gets me fired, and fires them immediately, put somebody else, we lose again, fires him again. But when you do that 3 or 4 times, and people are just losing their jobs dramatically, you might eventually get to someone that actually wants to keep his job and take it seriously. But if you are listening to explanation, oh, is this one, it continue. And that, I think that's the only way to deal with that. Oh, sure.
National issue.
What does it matter?
It's a big problem, and I'm talking about 400,000 barrels in that cluster of NCTL, a 92-kilometer pipeline over a swamp area. So I'm just saying we need to be careful about even worry about OPEC quota when we should focus on what we can control first.
Absolutely, I agree completely, and that's one of the reasons why I flagged even the Dangote refinery that people were expecting price. I don't expect any price reduction, but Dangote refinery functioning and impact on the economy depends on its ability to get crude feedstock from NNPC. So if an NNPC is not able to provide that crude feedstock because of the challenge you are raising, then he has to import it from outside the country. So look, it's very easy theoretically on paper, but in reality, all these little things have to, that's why I said they have to be screwed in on properly. Otherwise, it's going to end up in a theory. So you're perfectly right. In terms of I think the last question was, sorry, I've okay, well, the government has a social registry. I was part of the process of setting that registry. I know it's not properly, it's not very efficient. I don't think that's the best approach to get palliatives. I think most of you find that half of it's going to get lost. I don't, and that's probably why they are pushing. That might be, there's an incentive to go through that because money will get lost. That's the only, I mean, that's not the best and most effective way to get palliatives. And the final question was on, yes, I agree with you. I mean, that's straightforward. I agree with you completely. No economy that understands what it's doing. Taxes is country in a recession and when things are going down. If I give anything, they pull everything down. They want to you're trying to maintain purchasing power so that businesses can continue to work. You don't squeeze and squeeze and squeeze when your economy is going down. You are supposed to squeeze when the economy is actually growing. But in Nigeria, what we have now is government doesn't need money. And that's the problem with the subsidy removal. It wasn't that subsidy removal is actually, there's nothing wrong with subsidy. It's just that most of it was being stolen and we just didn't have any money to pay for it. There's nothing wrong with giving up any kind of subsidy. And the problem with it is like most things we do in Nigeria, we wait until breaking point. The reason why subsidy was removed was because we had no There was no way. There was nothing else to do. If there was still, I'm almost certain that there was still room, it would have continued. But it got to a point where there was just nothing that could be done again. So we just, the same thing with minimum wage. We like to wait rather than do things gradually so that the economy can absorb it. We don't do it for 10 years and then we do it all of a sudden and then it chokes everything. That's our strategy. Same thing with subsidy. With minimum wage, we increase minimum wage by 200% overnight rather than breaking it into source, and then all businesses just have to adjust their entire. That's what we do, and that's what causes all problems. So you're right. I don't agree with the policy of I've written about this and advised. This is not the time we should try to be squeezing businesses for revenue. I'd advise that rather than squeeze businesses for revenue, increase taxes and so on, I'd rather you focus more on more efficient expenditure of the one you have. Subsidy removal, yes. Go on all the report, all the unnecessary agencies, all the wasteful expenditure. We have a situation with government, revenue generating agencies in government, that as their revenue increases by 50%, they will increase their expenditure by 50%, so that the surplus stays the same. Those kind of things, that's why I think you should tackle first. We don't want to hear about, although it has been debunked, about politicians increasing their, that's not, or having several convoys. And those are, tackle the, why you are, give the incentive for business to grow, reduce taxes and so on, and then solve that problem by squeezing your own expenditure. But we're doing it the other way around. We're maintaining expenditure and then trying to squeeze business. At the end of the day, you might end up getting less revenue because if less people are demanding your product, VAT goes down, consumer what they call tax, company income tax goes down, and all this. So at the end of the day, you're going to end up getting less real value than you did. So I don't agree with that strategy. I agree with you completely.
Thank you very much, Dr. Kale. This is a question, I'm not sure if it's a personal question. Anyway, it's a question. Do you think, given that we're such a critical part in our nation's development, do you think you're more valuable to the country in the private sector than if you were to the country than if you were still in the public sector? Thank you.
I've been in the government for 16 years, although I came from the private sector. I think I paid my dues, and I'll just end that by using one of popular, I'm not available. I'm unavailable, sorry. I think I tried to serve my country for 16 years. I am not eager to go back to serve it comes, people don't usually understand it because we see the glamour. If I'm going to government to enjoy myself, sure. But if I'm going to work, you actually suffer, and it comes at a huge cost. And it came at, I'm not going to go into details, it came at a very, very huge cost to me personally. And in hindsight, sometimes I think if I knew that, I would not have taken it. So, yes, we don't hear these parts of the story. We see the glamour and so on, but no, that's for those that are going there to have fun. The way the economy is currently is a lot of work. A lot of work has to be done, and I don't think I want to put myself. It's a lot of. I've had death threats from governors, it's not. Once I finished, I'll just end by saying this. One of my friends said that on my last day in office, they had never seen me smile. No, I'm actually serious. That they saw a picture when I was taking with my minister. They said I was so relieved to be done, and that's because I know what it's not when I see people lobbying and fighting for this, I'm just wondering what they know what they are doing. It's a lot of work. If you want to do the work, it's going to be a lot of work, going to be very painful and stressful. It's going to cost you a lot, and I think after 16 years, I think I need a break. I think I need a break in the private sector where things are not, I'm not working less, but at least in a more saner environment. Let me put it that way.
Thank you very much. Okay. What that one is going on. The good news is that in your current role, you are still advising the government. So we are still tapping into your rich experience and your knowledge. So continue to do that at a fee anyway.
Dr. Kale, you basically told a story of unfulfilled potential, animal farm with self-inflicted harm. Is there hope in the sense of a lot of advice have been given to the new government through the transition committee. and you've talked about KPMG giving advice, etc., etc. Can anything really be done effectively without a whole system reform, especially of the civil service of this country, which is supposed to be the engine of policy implementation? Is there hope, truly?
Without the reform of the public service, no. At best, you have some improvements. That's the best you can hope for, but you'll not have that thorough improvement unless the civil service are incentivized to get things right. Unfortunately, people ask, how did I get, I worked in the civil service, public service, how did I get them to somehow work while I was there? I didn't go and preach national values, and I just changed their incentive. I think that's changed. I redirected their incentive. So you enter a system, all they were interested in is money. They were not interested in, mine was data. They were not interested in publishing any data. All they were interested in making money. They're happy to collect their allowances for field work, and they go under the tree, go and write some fake things, not even bother. When they even bring the fake data back, they don't even bother to publish it, because that's not the, you have collected your money, you don't care again after that. And that's what I mean by the incentive was to collect money and just make money, and they didn't care about the rest. So I didn't go and tell them how they should be Nigerians and love their country. I knew I was going to be wasting my time. I just I shifted their focus. So you're still going to get your money, but you only get money by completing the work. So I double your field allowances, but only give you 30% upfront. The majority of the balance is when the work is completed and the ICT department has validated the quality of the data. Then you get your money. So because they want to get that big balance, they focused on getting the work done as quickly as possible. If I got to a point where they are the ones that come and meet me, oh God, we have not published this, where is this good? They were actually pushing, they were coming with new initiatives, not because they love Nigeria, or because that's the only way they're going to get their money. So in the process, the system also improved. I'll give on that real story if I end. The director of procurement that I didn't have a lot of money at MBA, but I'm not interested in data yet in Nigeria. And the lifts kept getting destroyed every other week. And of course, we bring a file. We need to fix this lift, 3 million naira, 2 million, all sort of ridiculous amounts of money. And I did that for 4 or 5 times. The 5th time, what is good? Every 2 weeks, the lift gets broken, and of course, someone brings a file. Of course, in collision, we're going to pull something off. We understand that. So I just said, look, I'm not doing this again. They are banking on the fact that in Nigeria, the CEO is always on the top floor. So if I choose not to fix the lift, then I have to climb 7 floors up. And I did. Well, I was one of the youngest in the office. I was okay. I just stopped going to the gym, and I just used that for my exercise. So I walk up the stairs. And they were basically waiting for, okay, he'll get tired. So what I did at one point was, I just decided I started calling the director. He's on the 2nd floor to the 8th floor, like 6-7 times a day, deliberately. And I didn't have much to say. I'm actually serious. It sounds like a joke. So you come up, I want to see you. He will come up, I'll say something very, 30 minutes, oh, sorry, I forgot to tell you something. I'm actually serious. I called him up repeatedly. And these are very old people. So you see a 50-something-year-old man, at one point I got very worried because he was panting, out of breath. And I was actually worried that he might do. So after a few days, I sat him down. I told you think I don't know what is going on. Of course, he denied it. I'm not trying to argue with it. He was earning 500, 400 and something thousand from the whole deal. So I said, you are costing me 2 million naira so you can collect 400,000 naira that I can't afford. So I did a deal with you. I said, we focus. I said, okay, I will send you on training. You're allowed to get your training allowance. It will come to about the same amount of money. You will save me 1.6 million naira. When you come back, you must train the staff on what you learned. The lifts start working. Again, it sounds like a joke. I don't think the lift broke down significantly again after that. And if it broke down, he went to fix it. So I created a system where they understood that you don't get money for repairing things. The only way you're going to make money is if you are introducing enhancements to the office. So you are coming up new ways to improve data collection. Yeah, you will probably make some money from the process, but at least it's improving the entire system. So if government understands, that's why I said when people are talking about the president's ability to is very good at that, getting talented people. That's not all that is required. You still need someone that knows that understands the way they think and comes up. It's not by power or by intellect. We have had many intellectual, highly qualified people in government for years, but they didn't establish anything. Not because they were not talented, because the system fought against them. So you need someone that understands the way they operate and has a way to modify their incentives such a way that it benefits the system. Otherwise, we're going to stay exactly the same way we are.
Has that which you put in place been sustained, or has it been destroyed?
It has. It has definitely hasn't been destroyed. I don't want to sound biased. I don't think it's as effective, but certainly hasn't been destroyed. They are still following the same. It has reduced a bit, but I don't think it hasn't been destroyed. The office is still functional, but I've seen some few issues with policy.
The answer is yes.
I would rather not. I worked for 10 years trying to build the capacity of the MBS. They still have a lot of work to do. I admit that we're not yet world standard. I've noticed some things that are worrying, but I would not state categorically that we cannot trust the data of MBS anymore, especially since it's an office I'm not going to, even if I believe that was the case, I'm definitely not going to state that officially. The current statistician general is someone that I groomed in the system. In the 10 years I was there, he was a middle-level manager. It's someone that understood the reforms that we built, and I'm just going to keep my fingers crossed and hope that he keeps faith with what we are trying to do. And that's the best I can see as far as that's concerned.
Okay, so let me just take this question from our online participants. Given everything, said Dr. Kale, given everything you have said, can you advise the government on the best form of palliatives that can possibly affect Nigerians, including myself, owing to the subsidy removal and high inflation rate?
I'll break them very quickly into two. Like I said, I think I already said that in the presentation. Two, the short-term palliatives, and they have to be temporal. Whatever palliative or interventions we introduce in the short term has to be exactly that, short term. That's why I don't like salary increases, because salary increases or minimum wage increases are most permanent. You have to keep, and it affects only a very small percentage of the population and can stoke inflation. I prefer palliative that you can remove very quickly. For example, tax reduction. If you reduce taxes for 6 months, you can always increase the taxes when the economy starts to easier. But when you increase someone's salary, you're not going to take it back down. So easier to just reduce taxes and paying. So I still have more or less the same amount of money I had to spend in the economy. And then when the economy starts to boom, you can push it up. So I think things like tax breaks, both for businesses as well as personal income tax, is a better palliative in my opinion. And things like I said, electronic transport vouchers. And over the longer term, things like mass transit, improvement in health, education infrastructure, and things of that nature, I think there are better ways to handle this short-term intervention. It has to be temporal. That's the point I'm trying to make. Very short-term in nature. But I don't believe in giving cash and sharing 5,000 naira and things like that. I don't think that's the best way, the most effective way to go about it.
Okay, thank you very much. Someone actually asked about the tax incentives for the foreign investors, but I think it's been answered. You said, can you speak to the current tax and financial incentives for foreign investors? Do you feel these are adequate? If removed, will these disincentivize investments?
Yeah, are you talking of, that sounds more like portfolio investors.
Well, I think he said foreign investors.
Okay, well, yes, I think when you are you mean the tax incentives to attract foreign direct investment? They have been there for many years. It hasn't worked. And I feel if you're putting so many incentives that actually look good on paper, but it's not attracting foreign investors, you have to go back to the drawing board and find out why the investors are not coming in. I prefer more of a targeted investment. So you are going to a particular company that you know, whether it's already existing or existing somewhere else in the country that you know is big. For agriculture, for example, you go to a big name in agriculture and tell them, we want you to come and open up investment in Nigeria. What would you need to come and set up your business in Nigeria, or to expand your business if you're already here in Nigeria? And and you based on the sectors that you are trying to focus on. You pick 1, 2, or 3 of them, and then say, I'm going to get these 3 guys, whether they're domestic or international, to come in, and you're speaking to them directly, rather than having this general incentive to pull in investors. When you speak to them directly, you know exactly what they need. And I think that's better than we sitting down in Abuja trying to guess what all investors will need, because again, what a particular sector needs is different from what another sector needs. I mean, he mentioned security as his main constraint. Somebody else might mention FX. Somebody might say it is capacity. Or another person might say it is distribution. I mean, there are different things, and you have to speak to. So decide the sectors that you are. Most countries in the world is not the little. It's not by you see they have a few big players in their sector, and they are the ones that drive the economy, not trying to bring in everybody in bulk.
Okay, thank you very much. I think our time is fast spent, and I just want to say a very big thank you for your insights that you shared this morning, and I hope that when next we call upon you, you will honor our invitation. Thank you very much.